What's good, y'all? It's HB Punch and Profit, January 31st, 2025. We're going to break down price action this morning in the NASDAQ. If you want to see the live executions, I have two videos uploaded already on my YouTube Shorts, and I'll put the links in the description below and the video cards for this particular video. I'll upload one more video on Saturday just so I don't blow up the feeds too much of a live execution. And before we get started, like the video, comment down below, subscribe if you're new. It helps the channel, helps me find the time to provide you guys with free content. Um, so what a day of trading. I mean, beautiful setups. This is one of those days where your signals is just hitting on all cylinders if you execute properly. Now, I have this ICT macro indicator on that highlights the macros. If you're starting off or you're transitioning from a different style of trading, this is your window right here. 950 1010 macro to the 1050 1110 macro and anything between the silver bullet hours. You should start off with that. Once you master and see the signals and become proficient and profitable, you can expand out to the afternoon macros if you want. You can expand out to the or before the 8:59:10 macro or trade the opening bell. That's a key time period. But start off with this and then you can graduate outside of it. And if you're becoming profitable, why even do that, right? um, but yeah, let's get into it. First things first, higher time frame. You go on a daily, 4 hour, 1 hour, you're going to see bullish order flow. Okay, especially because on the daily we have a new week opening gap that was roughly around here and it was unfilled, and price action was encroaching on it. You know that's acting as a price magnet. Okay, so that was indicating bullish order flow. Um, Another thing, I just want to pause. I got two kids in the background, so they're gonna make some noise. Bear with me. 2, 3, we're gonna look for our key signatures. Okay, the inversion, which will be highlighted in the orange box, and the advanced market structure shift, which will be a blue bolded line, and that will be where we place our entries. Okay, whether it be limit orders or buy or sell stops. When you become very advanced, you'll learn or you'll start trusting those buy and sell stops. They're very effective, and when we get more subscribers, I'll kind of go more into detail with the higher time frame and how to enter in on these positions. 4, we're going to place our stops as a preliminary at the swing lows. In case of today, only looking for buys, so the swing lows. If we're looking for sells, then the swing highs, right? Or it can be at your discretion. For my goal in 2025, I only want to risk about $200 on most of the trades. I'm looking for a risk to reward of 5 to 1, right? That's not to say I won't utilize 1 to 1s. I have a lot of 1 to 1s that I take, especially when we have a choppy range where I'm unsure of the higher time frame. I want to get in and get out. But one of my goals when I'm looking for those big low resistance trades is to only risk about $200. 5, take profit or preliminary 1 to 1 or more or at your discretion. So let's start off with the opening bell roughly at 9:30 before the first 950 1010 or before the 950 1010 macro. We get an inversion right here. I'll highlight where the bearish and bullish fair value gap were, where they overlapped. We get this advanced market structure shift at the candle body high. We get a close over it. If you put a limit order, it tapped you in right here. I actually did put a limit order here, not a buy or sell stop. I put a limit order. It didn't get tapped in on this one. Got tapped in on the second one where the wick went slightly below, and this was the trade. Like I said, live execution link below, you can check it out. This is the trade I framed. I only risked about $200, and I went for roughly a 5 to 1 risk to reward. That was the trade I took. Now if you're a newbie, I always say keep your stop at the swing low. uh, don't over leverage. Use about 1 to 2 micros and aim for a 1 to 1. Okay, now most of you are freaking out. That's a 70-point stop. I can't believe you want me to utilize this. That's stupid. That's crazy. No, it's stupid and crazy to you because you're over leveraging and you want to put on 5 minis and think that's going to work out for you. And I don't even know why most of you are freaking out, because you'll put 5 minis on one trade with a 50K account, which is only about $2,000, right? A $2,000 account. And you're complaining about one micro that goes 70 points, which is only about risking $140. Most of you are risking all $2,000 on one trade. So don't give me that. Okay. And as time goes on, you can move that stop up. Okay. All this is doing, and you only take 5 points of drawdown. as you see right here. Still hasn't even come back. It's going up. This might hit a 2 to 1. Almost does here, right? 131 points, 1 to 8. It might hit that 2 to 1 target. Okay, that's not far fetched later in the day. I don't like holding trades that long. That's unnecessary to me. I got 2 kids. I'm impatient, and it messes with my psychology. I like getting in, getting out, making a certain amount, and being done with it. But it's there if you want it. Uh, Most of you need to understand that it's about process when you're first starting off. Stop worrying about money. The money will come when you focus on getting that process correct. Yes, that's a big stop. With one micro, not that big of a deal. Most of you are over leveraging anyway with stupid trades. You can move it up as the trade starts to play out in your favor. Okay, maybe I'll put it just below the inversion. And then maybe as the trade continues to go on, I'll put it just above the inversion. And then maybe I'll encroach on that advanced market structure shift, bring it to break even or above it. Give yourself room to breathe. That's one of the things I encourage new traders to do, is give your trades room to breathe if you have some sort of logic behind it. Because if you keep tight stop losses, you may not even give yourself a chance to see the trade play out and develop. And most of you, when you get stopped out, what do? You're looking for the next trade, and you're not paying attention to why price action did what it did. Why did it stop you out? If you have this stop right here, which is a protected low, I put it there for a reason. It's a protected low. It's gonna it's gonna stay intact for a while, okay? Because you got all the signals and the higher time frame narrative. It's a protected low. Okay, it gives you room, it gives you time to think, look at what's happening with price action, gives your trades room to breathe. What happens when it came back to the fair value gap or pulled back to the volume imbalance or the order block? What happens when it went up? You need to see these trades develop, but you need skin in the game. But if you keep a tight stop always, you get stopped out. Now you're looking for the next trade. You're not even paying attention to what happened and why it happened. Right? So that's the logic behind it. As time goes on, you can keep a tighter stop, but learn why price action is doing what it's doing when you get these signals. Okay, so that was off of the opening bell. Let's put that ICT macro. So 950 10 macro, once your eyes are trained, you're going to be able to point it out. Oh, but before we do, let's go back to this one and highlight where the bullish fair value gap and bearish fair value gap overlapped. You had a bearish fair value gap in here. Let's mark that out in red. And you had a bullish fair value gap in here, and volume imbalances. You will miss all of this if you don't look at the volume imbalances. That is critical. Volume imbalance in here. Let's remove that one time. Volume imbalance in here. Volume, zoom in a little bit more. Volume imbalance in there. That is our bullish fair value gap. If you don't see that, you're missing it. You're missing the whole thing to begin with. Where is the overlap occur? Bang, right there. Let's get rid of that. So let's put one box highlighting, summarizing where the inversion roughly occurred. Orange box, and that was that. Okay, let's do the same thing. Now, by my trained eye, I see it right there. Boom. Inversion, advanced market structure shift. And with my experience, what do, I place a buy stop at that blue line. So as soon as I see this moving, and how can I jump on this? Now, did I jump on this one particular? No, but if I were to, because my trade was right here, it was running, okay? But let's say you were looking for this one. You didn't trade anything off the 930 opening. You can get this by knowing, okay, we have that new week opening gap up here. It's unfilled. It's unfilled and it's Friday. We're probably going to fill that most likely. That's acting as a magnet. So I know we have very bullish order flow. This looks like a beautiful signal that's developing very quickly. Now, where would I have been seeing it? As soon as I saw this bearish fair value gap, if you zoom in, because I'm very confident in that higher time frame narrative, that's a bearish fair value gap. It's tight, it's in there, it's hard to see. That's a bearish fair value gap in there. Let's take that IC macro signal off. And for me, while we're down here and I see this third candle completed, we have a bearish fair value gap. I'm thinking, ooh, bullish order flow. We have that new week opening gap that's unfilled. It's Friday. I'm putting a buy stop right here. And if we move up, especially if we invert that bearish fair value gap, or create that balanced price range, whatever you want to call it, I'm going to put that buy stop right here. I'm going to get clicked in real quick. Boom. Swing low. That takes experience though, right? Offers you almost 100 points or over 100 points. If I kept my stop at swing low, that's a 3-1. And you can keep a tight stop. In this case, because I know it's the macro and price wants to spool to that target, I can keep a tight stop. Maybe I keep it just below or where the volume imbalance is, where that bullish fair value gap. Maybe I keep it closer. Right? It's all up to you. I risked $200 on these spools up, right? Look at the risk to reward. It could have potentially offered you a 10-1. Okay, so that was the trade. Now, what did it offer if I just kept my stop at the swing low? Okay, and let's trade this, or I want you guys to see the overlap real quick. Obviously, you had this big bullish fair value gap right here, volume bonds at the bottom. That's where the overlap occurs. Let's get rid of that, change this back to orange, and we'll expand it, summarize where that inversion roughly occurred. And if I kept my stop at the swing low, I would be aiming for a 1-1 at the very least. Boom, it hits easily, or a 2-1 hits nicely and even gets you a 3-1. Okay, so that was a second opportunity at the 950-10-10 macro, and anything in the silver bullet hour is available to you as long as you have the right narrative. Now, this third trade, you have to remember 930 opening, we spool up. Okay, it hits low resistance. Second, 950-10-10 macro spools up. Okay, real quickly. In this 950-10-10 macro, you already had a nice signal. You can get another one, but don't expect it to be low resistance, right? Don't expect it to be very low resistance. So it's there, inversion right here, in there. Go look at it. That's why I give you the date. Go look at it for yourself in the charts. Advanced market structure shift. Now this one has high resistance and puts you in a little bit of drawdown. That's why I say start off with micros so you don't have to worry about any sort of drawdown and you can let your trades breathe. That's a protected low. You get your signal, you get the candle close above it. That's a protected low, and you got the higher time frame narrative, right? Right. It pulls back about 30 something points, right? About 31 points. That's only $60 with one micro. That's only about $120 with two micros. Okay, most of you, like I said earlier, are over leveraging and putting 5 minis on each of your trade with $2,000 accounts. So shut the fuck up. Okay, just shut the fuck up about it. I don't want to hear about, oh, this stop's too long. Okay, I say that with all due respect. I say that out of love. All right. Now, one of the things I'd recommend if you get a nasty pullback, right? You get a, don't freak out. That's why if you put one micro, it's not that big of a deal. Who cares? Okay, it's not that big of a deal if you come all the way down here. But if you got 1 mini and you're coming down here, your asshole's gonna be puckering, man. I tell you what, it's gonna be puckering with 33, and you're gonna be sweating. And you're just gonna, okay, fuck it, I'm out. And then look at this big run, and it's gonna move without you. Just put one micro. You're getting used to the process. If you get that candle close above that advanced market structure shift and you get this wicked pullback, you're only down $60. Okay, you're only down $60 or 70, roughly speaking. And you're not even, it doesn't even hit your stop. Okay, but at this moment you're freaking out, you're disappointed, you're like, oh, it's gonna hit to stop, and no, let it play out. Trust these swing highs and swing lows that give you the signals. Okay, and it actually goes out. Now, what would I do if it pulled back very nastily like this? What would I do? I would tell myself, okay, I think, not that I think, I know that for the most part, because nothing's 100% certain in the market, right? But I know for the most part, if my higher time frame's correct and I get my inversion, I get my advanced market structure shift, this is going to hold. The reason why we're chopping right here is because we had two smooth runs just before this and a nice signal in that 950-10-10 macro. Okay, this is going to chop for a little bit. What you can do is wait for us to get back to break even. You can close the trade out, but most of the time it will offer you some points. Now, for me, if it pulls back like this, I may have the intention of, okay, I'm going to get a 2-1, right? I'm going to aim for a 2-1. Nope. I'm dropping down to a 1-1. If I have a nasty pullback like that, I'm aiming for a 1-1 risk to reward, which it eventually does tap you into. Okay, that's how I'm gonna manage that. I may start off, okay, I'm looking for a low resistance. Oh, it's not low resistance. Bring it to a 1-to-1. Or if it's just destroying you to sit through it, get out at break even or small little profit. Now, that trade does play out in your favor if you held, right? It does offer you 1 to 8 up to 62 points. Okay, and as price is going back up, maybe you start tightening that stop and now you get a really nice risk to reward. Okay, but trust that low. Don't over leverage and you'll be okay. Now, another thing is I think roughly up here was the new week opening gap and it's essentially filled. So you have to keep that in mind. We had two big runs up. We filled the new week opening gap. We're probably at a point of exhaustion. So I'm not going to be looking for 3-to-1s, 2-to-1s, or this second signal that presented is not going to be as efficient and effective as the first two signals. But guess what? It does play out eventually. It does show you the signal again right here. Okay, there's an advanced market structure shift right here, and this is in the silver bullet hour. In there is an inversion. I'm not going to go zoom in. I don't feel like it. Like I said, go refer to it at your charts. Okay, and you get a very nice quick efficient setup with little to no drawdown. Okay, that's another thing. You could keep tighter stops, right? If you keep a tighter stop and get stopped out, no big deal. I'll wait for another signal. Well, the signal comes here with little to no drawdown. I keep my stop at the most recent swing low, which is right here. Okay, this one offers you anywhere up to almost a 5, 4 to 6. Okay, you get your inversion in here. You get your advanced market structure shift. You either put a buy stop or limit order. If you put a buy stop, you were in and you got filled immediately, and you get a nice trade, right? If you aimed for a 1-to-1, you get in and out pretty quickly. That could have gave you a 2-to-1, 1-to-1. You get in and you get out quickly, right? Now you can tighten your stop just below the inversion, just above. It would have been nice. But let's say you put a limit order, you keep your stop at the swing low, you get tapped in right here eventually, right? And you only take about 5 points of drawdown, okay? And then you really spool up to a nice 66-point move, okay, depending where you took profit. All right, so that was a nice trade where you took little to no drawdown. That's one thing you can do is you can keep tight stops and sit there. I'm not going to risk more than a 1 or 2% of my account. If I get stopped out, so be it. Okay, and wait for the next opportunity. It's in the silver bullet hour. Boom, you get it right here. Now let's zoom in and highlight. You had a bearish fair value gap, volume imbalance right here. Okay, let's tighten that up. That was your bearish fair value gap. Mark that out in red. And then you have a bullish fair value gap right here, and now you see where the overlap occurred. Happens quick. You got to zoom in and pay attention. That's where our advanced market structure shift is. So we'll get rid of one box and highlight roughly where the inversion occurred. Boom. And those were three great opportunities. Even if you sat through the chop and the drawdown in this one, it still worked out in your favor. Okay, but let's say you wanted to cut ties. Okay, wait for another signal. You get one here, boom, you get tapped in, it goes. Okay, I think I have live executions for all three of those, so you can check those out. And 1050, 1110, nothing really presents itself. Pretty much when you get that many signals, most likely you're not going to get one in the next macro. And I don't even know why you'd keep trading. So this is HB Punch and Profit. Comment down below, like the video, subscribe if you're new. Peace. Have a good weekend.